Hello and welcome to the Banker Awards 2011 at the Intercontinental Hotel in London. My name's Geraldine Lamb, I'm the Senior Editor of The Banker magazine, and I'm here with Brian Kaplan, Editor of The Banker magazine. So Brian, it's been a big year. What have the entries been like?
Well, we've had a fantastic response, as always, for the Bankers Awards. We had more than 500 applications from all over the world. We were able to give awards in 147 different countries, ranging from Netherlands to Namibia, from Chile to China. So we're very pleased, that the Bankers Awards still is on people's highlight of the year in terms of banking competitions and getting recognition.
And do you know how many are coming tonight?
We've got more than 100 bankers coming to pick their awards up personally, and they're coming again from all over the world. Sometimes they put the Bankers Awards in their general travel calendar and come and do a little bit of business in London, I think, at the same time. But we're pleased to welcome people from all over Africa, all over Asia, and all over Latin America.
A truly multinational gathering.
That's right, yeah.
So it's been a really tough year economically and especially for the banks, and I suppose especially in the Eurozone. Has that been reflected in the awards, or have you seen lots of evidence of other more positive growth in the banks?
Well, I think one of the interesting things about going through all the applications that we get is that it gives you a different picture of banking away from the one that you get in the newspaper headlines. So we hear a lot about worries over banks having sovereign exposure and so forth. But actually, when you look at the applications from banks in many parts of the world, they're just getting on with their mainstay business. And we ask questions about marketing initiatives and technology. You find that banks here are doing new things with banking systems, putting in new core banking systems and doing their processing better, getting their product development right. So all things are in place, I think, for these banks when the market picks up.
I mean, there's a huge push, isn't there, with many banks, especially in developing economies, for, to increase financial inclusion as well, and that's reflected also in our awards, isn't it?
That's right. We have a special award for financial inclusion. We had more than 50 entries. I mean, just for that one award, I think, which shows. I think banks have always done that kind of thing. They've always had these initiatives where maybe they're on the educational front, or maybe they're on sort of social development and so forth. But I think, as banking has suffered from a reputational problem, I think that they've realised that there is some value in publicising what they're doing. I don't think they're just doing it just for publicity. I think they've always done it, but I think they now realise that there is some scope for trying to make people understand that banking, is a positive force.
And I mean, as we were saying, it is a tough year. I mean, there's a huge swathe of regulations coming down the line. What have you been seeing about that as you look through the banking world?
That's right. I mean, some of the technology moves by the banks are in order to get them ready to meet certain regulatory requirements. And of course, it's different for every bank now. So whereas I think before the crisis, we were looking at a world where we were going to be on, a Basel world where everybody was going to be on the same kind of regulation. What we see now is that regulators around the world are doing Basel, but they're also doing 2 or 3 initiatives of their own. So this is very difficult for the banks, especially international banks with lots of operations around the world. They've got to have a different regulatory challenge in each market that they're in. So it's going to be tough, and obviously the revenues are not as strong as they were. So it's a tough outlook, but we expect to have a great night at our awards tonight.
Indeed. Well, thank you, Brian. Well, I hope you enjoy the highlights from the Banker Awards, and please feel free to have a look around the rest of all of the content available on thebanker.com.
The Bank of the Year for Africa is Standard Bank.
Hello, my name is Paul Wallace. I'm the Africa editor of The Banker, and I'm here with Chris Newson, who is Chief Executive of Standard Bank Africa. Standard Bank won the award this year for Bank of the Year Africa. Chris, Standard Bank in the last few years has increasingly focused on Africa, downsizing in other parts of the world, notably Argentina and Russia in the last 12 months. Can you just explain briefly what the reason is behind that strategy?
Sure, Paul. I mean, I think it's less about withdrawing from the rest of the world. I think the piece of the strategy that has changed, given what's gone on in the rest of the world, is really an ambition to build universal banks and many other emerging markets outside of the African continent. So, I think it's back to basics in a way. It's also understanding that we have a very strong franchise in 16 countries, excluding South Africa. Obviously, the nub of the businesses in South Africa, and the question is, we think we've got a competitive advantage there, and it's something to be built on. And we also think Africa's time is coming, and has come. If you look at the level of interest in the continent and the level of growth that's projected to come out of the continent and the opportunities, it's clearly somewhere where we would like to continue to grow significantly. And I do think many others are starting to spot that opportunity as well.
Do you see many opportunities for retail banking on the continent in the next few years, or will your focus primarily be on corporate banking?
No, we very much see a universal bank model for us. The reality is that 80% of Africans don't have access to banking services. You also see a really strong growth coming through in terms of middle income type of environment and sector. So for us, it's very much universal bank. The opportunities certainly do exist in the retail business. We link that retail business strongly to what we do in the corporate market. Clearly, every corporate has a number of employees, and there's a very strong ability to link your corporate relationship and your employee relationship. But also we exploring and developing and have started to be very active in many other personal markets, which are areas which historically maybe we haven't played as big a role. And we see fantastic opportunities across many of our markets, including the fact that in some of the bigger markets and the bigger opportunity markets, we think we are maybe slightly subscale, and particularly the newer businesses are in the personal business banking. We've spent a long time investing in that infrastructure and people, and we think the time is now right to reap the rewards of that and get ourselves close to customers and build that. So I think it is both a corporate and a retail opportunity, but certainly given where our franchises are, a significant part of that is in the retail businesses.
There's been quite an increase of sovereign bond issuance from sub-Saharan African countries in the last 12 months, admittedly starting from a low base, but Senegal issued a debut benchmark bond, Namibia has recently done a debut bond as well, Nigeria has issued this year, and there are rumours about other countries such as Zambia and Kenya looking at the market.
Yeah.
Do you think this trend of more and more African countries coming to the Eurobond market is going to continue?
I do. I mean, clearly, I think there is a trend which you've described many of the ones that are currently sort of either known because they've been issued or in the pipeline, and certainly one can see that trend continuing. The rationale for those bonds is not necessarily only about raising funding and the opportunity to do so in an environment where liquidity was looking for yield upticks, and particularly where there's a perceived good risk reward ratio, and so the likes of the Namibian bond, which was issued in October, which is not as we all know, it's been a pretty tumultuous time for particularly for Europe, was oversubscribed, and so certainly I think that there is an appetite for that risk. Clearly, if liquidity continues to dry up around the world, that will have an impact, and so that's the unknown in terms of capability. We also have to recognise that many of these governments are looking at issuing these bonds not only for funding per se to balance the books, but also as a benchmark on the back of which the private sector, corporate can start issuing their own bonds. So it is an important part of building a yield curve in many of these countries, and I think that's something that we will certainly see continuing across many of the countries that we operate in.
Sub-Saharan Africa is one of the fastest growing regions in the world. GDP is expected to grow there about 5 or 6% next year. But obviously the downturn in Europe and the US and Asia, if there is one, would have an impact on African economies. How worried are you about that?
I think you'd be mad if you're not concerned about it. I think it has the two primary impacts, I guess. The one is that as a trading partner, particularly Europe, is a good 30-35% of trading activity in terms of export activity of many of the countries. And so clearly if there's a downturn and demand coming out of Europe that has to impact the continent. But secondly, and I guess almost as importantly and interestingly, if you look what happened to copper price today as an example, it went up 7%. And why did it go up? Because there was a plethora of good news and concerted effort by central banks around the world to try and increase liquidity in the markets, and that all has a positive impact on potential growth, and significantly you've seen commodity prices increase on that. That's good news for Africa. I mean, many African countries are too reliant and in some cases wholly reliant on single commodities or multi-commodities for their revenues, and so a strong growth worldwide is important for prices of those commodities and demand. So any dampening of that does have an impact on some of the countries, and one would certainly be concerned about that. But having said that, I think many of those countries are desperately trying to diversify their economies, and that certainly brings opportunities. In addition, the lack of infrastructure, power, transport, and the likes in most of sub-Saharan Africa is something which the governments are certainly having to focus their minds on, and that doesn't necessarily talk about external demand.
Chris, thank you.
Great pleasure.
And now the Bank of the Year for Latin America is Itaú Unibanco. Now the Bank of the Year for Central and Eastern Europe is Sberbank.
I'm Philip Alexander, the finance editor of the Banker magazine, and I'm here with Anton Karamzin, who's the Chief Financial Officer of Sberbank, which was the winner of the Bank of the Year for Central and Eastern Europe. Anton, good evening.
Hello.
Well, many banks in Europe have been suffering from very volatile results over recent years. Sberbank has maintained very consistent profits. I think for the first 9 months this year it was return on equity of over 30%. What have been the key elements that have maintained that kind of profitability and stability?
It is the core parameters of the franchise, the market share sustained, the very good measure of risk and reward balance that we've been managing to exercise throughout the crisis times and in the years following 2008-2009, and our dedication to delivering the client service experience that is striving to get better than the competition.
And obviously this year has been a very significant one for Sberbank, with the purchase of Troika Dialog, a large Russian investment bank, and also your first purchase of a major bank outside the former Soviet Union with the purchase of Volksbank International's Central and Eastern Europe network. Do you see an opportunity for Sberbank now, as some of the Western European banks are rolling back their activities, to become genuinely an international player as well as the leading player in Russia?
Well, we do see opportunities for long-term growth in Eastern Europe, and we believe that the acquisition of VBI gives us a platform to start off with. Maybe one or two smaller additions in the Eastern and Central European space, but whilst we do strive to get an award at some point in time of being the best bank in Europe, once we're already number 3 bank in Europe in capitalization terms, the good news is that we're actually having no ambition to buy anything in Western Europe.
Here in the UK, of course, we're watching events in the Eurozone with some anxiety. Do you expect them to have an effect in Russia? Are they affecting the strategy or the general kind of approach to managing risk at Sberbank, or do you think that the risks for Russia are kind of well contained and already sort of factored into your strategy?
Of course it does. It'll be unwise to expect me to say, or anyone to say, that Russia is fully insulated. Russia keeps ever so more integrated with the rest of the global economy, and particularly with Europe as one of the biggest trading partners. Therefore, if the European events unfold in a kind of significantly negative fashion, then of course Russia will be impacted. What is probably likely to be different this time, if it happens, is that it will be in fact impacted in a much more gradual way in terms of overall decline in the macroeconomic activity, comparable with the decline that might be resulting from any events globally, rather than in a shocking market crash type reaction events, whether that in the liquidity space or in equity market pricing space, simply because both the Russian monetary authorities, market players, real sector and consumers have learned the lessons from 2008-2009 crisis and are therefore not running that much FX exposure, liquidity mismatches or over leverage as they used to have been back in 2008-2009.
And just finally, obviously the bank set out a strategy back in, I think it was 2008, a development strategy both in Russia and for its international footprint. What are the next steps in that strategy in terms of the coming year? What do you see as likely to be the major developments at Sberbank?
2011 has been year 3 of that 5-year period, and so far we can report that on over 70% of all the initiatives that we've set out to do there remain to be actually on track, and less than 30% are somewhat delayed, mostly because of the complexity of the task and the fact that the preceding 3 years we had to operate under the conditions of the 2008-2009 crisis. But those that are behind are only a few months behind, so we're seeing that all the targets that we've set out in that strategy are on track to be completed by 2013-14 as we set out. A number of them has already been achieved, and we are likely to use 2012 to start coming up with the development of this strategy into further 3-5 year period to see a bit more specifically what will be the next steps. But so far it's execution full swing.
Well, that's great. Thank you very much for your time, Anton.
Thank you.
I hope you enjoy the evening.
Thanks for having us. Thank you.
The Bank of the Year for the Middle East is the National Bank of Kuwait. The Bank of the Year for Western Europe is Santander. The winner of the award for the best transaction bank is Citigroup.
Hello, I'm Jane Cooper, the Global Transaction Services Editor for The Banker magazine. I'm joined by Rajesh Mehta, who's the Head of Treasury and Trade Solutions at Citi for Europe, Middle East and Africa. And it's a global award, and Citi won the Best Transaction Bank. So Rajesh, can you tell us what the highlights were of last year?
It's been a very eventful year in the transaction banking space. Firstly, from a point of view of macro environment, we had some of the issues in the Middle East in the early part of the year. You got Europe to contend with. Having said that, there's clients with needs, and never before, either externally or internally, has the transaction banking business been so relevant, not just to the clients, but also to banks which have large operations in this space. So we've been very busy helping our clients manage some of the risks they see in the environment, helping them ensure that they carry on trading, helping them make sure that they have perfect visibility on where their assets and exposures are, and help mobilize and move those assets and exposures as they deem appropriate. We've also been busy with a large number of our public sector clients who face different needs, whether it is an enhanced social benefits agenda in some countries, or a greater drive for efficiency and success transfer from the private sector, or in ensuring that the wheels of commerce and trade and supply chains and the small and medium enterprises stay supported during some of the difficult times. So it's been a very busy year, but it's been a very fulfilling year.
And what can we expect to see next year?
I think a continuation of the same agenda. I would say a lot around risk management tools to enable our clients to manage the risk they see better. I'd say it's going to be a lot more of trade finance and supply chain support activities, and even for those clients who have growth agendas, especially in Asia, Latin America and Africa, I think you are going to see some of the usual growth that we see in this business.
Now, the award for the Best Bank for Financial Inclusion is Standard Chartered.
Hi there, Dan, how's your new romance?
The winner for the Global Bank of the Year 2011 goes to HSBC. And to collect the awards, please welcome Chief Executive Officer for Europe, Brian Robertson.
Well, this year's Global Bank of the Year for the Bankers Award is HSBC. I'm here with Brian Robertson, who's the Chief Executive for the UK and Europe. Brian, congratulations on the award. It's a fantastic achievement.
Thank you very much, Brian. We are ecstatic.
Okay, that's great, because we like to. That's exactly what we like to hear. So, give us a little bit of a feel for what the strategy is with HSBC now. We know that you had this big investor day in May,
right,
and a lot of changes are going on. So, give us a little bit of an overview of that.
Well, basically, our strategy is to be the world's leading international bank. So, in our wholesale banking space, the global banking and markets and corporate banking and commercial banking, that's all around connectivity, connecting the faster growing regions of the world with the developed world, capitalizing on increasing trade, capitalizing on foreign direct investment. And in the retail banking and wealth management space, it's concentrating on those markets where we have scale, where we can bring retail banking and increasingly in developed markets wealth management, as people have to manage for their retirement, as obviously governments aren't going to do that for them. So we refreshed our strategy in May, as you mentioned, and since then we've executed 14 different transactions, all refocusing the group.
And you're making these changes, obviously, not the best of climates for business. Fortunately, you're not focused in the worst areas, which is the Eurozone. But how do you see the general business outlook? It is rather impacting on almost everywhere in the world at the moment, isn't it?
True to say that the conditions are difficult.
Yeah.
And the area of the group I look after, which includes the Eurozone, is clearly one of the more challenged areas of the world at the moment. But we do see growth. We continue to see growth in our Asian franchise. We continue to see growth in our Latin American franchise. We continue to see reasonably good growth in the UK. Focusing on those clients who are internationally connected, who are less reliant on domestic economies, which are in various forms of stress. So we see some bright spots, but it's undoubtedly a very difficult environment at the moment.
Well, HSBC has obviously been very successful, negotiated the crisis successfully, and now it's sort of in a good shape to pick up business when the markets pick up. What would be the sort of one or two key things that you would talk about in terms of categorizing HSBC's success, perhaps in terms of culture and?
Well, we've been around for 146 years.
Yeah, that's a good yeah.
We've been through a number of crises in our lifetime. So we are quite used to dealing in crises. We have a cohesive management team, many of whom I've been with the group for 37 years. Many of us have been with the group for a long time. We've all lived through difficult times before. We have a culture which is somewhat unique, I think.
And you used to be in charge of risk management, I think. So.
I was indeed the Group Chief Risk Officer from 2005 up until December last year. So as a reward for helping navigate the last financial crisis, Stuart said I could run the easiest part of the group, which is the UK and Europe going forward.
Okay. Brian, thank you very much indeed.
Okay.
Once again, hearty congratulations.
Thank you very much.